As we begin the show, our first presenter is our friend and partner, Dave Whitmore from Etrade. Dave.
Thanks, Dan. I'm mic'd up
Awesome.
here. Thanks a lot. So I got a couple things to share with you of an interesting little study that we do. But before I get to that, welcome to everybody out in Streamland, everybody here in the audience. Dan said, I'm Dave Whitmore from Etrade. I have the fancy title, Senior Strategist for our trader education programs. We do a lot of in-person events as well as our webinars. And me and 3 or 4 colleagues run and create and deliver the content for that. A big event for Etrade has recently come about with our acquisition of Options House. If you're not familiar, Etrade about a year ago bought a company called Options House, bringing back our former president to come back and bring Etrade back to its trading roots. So the Options House platform gives us a great deal of capabilities that were not present previously. We now have 2 active trader platforms, the Options House platform and what's called Etrade Pro. Etrade Pro has trade ideas embedded in it, and it's one of the powerful tools in that. So our guys out there have a booth, table, on display are both platforms if you want to go out and check it out. One more thing, the commercial message will end right now. We're bringing back the brand Power Etrade Pro. You're seeing this in some of our commercials. It's about getting even, and I think the artificial intelligence and the trading technology of trade ideas combined with that is what that message is all about. Regarding Power Etrade Pro, basically, if you trade 30 trades a quarter, we take you down to a $4.95 base rate plus 50 cents a contract on options. So if you're an options trader, I think you'll probably find that very interesting. Okay, let's go. I'm going to share with you a quarterly report, some of this quarterly report. And by the way, you can get the entire file on this. I'll give you the URL if you're interested in that later. This is a quarterly report that we put into the field asking individual investors about stuff like the markets and the economy and themes that they're seeing, et cetera. In some ways, it's conventional. What do you think about the market? Are you bullish? Are you bearish? But there are also some nuggets in here that I think are a little bit interesting. Let's first talk about, all right, that went a little ahead of me there. So let me talk about the methodology here and when this was in the field. So we do it quarterly. This was in the field from July 1st to July 10th. The market conditions prior to that, market peaked, if you look at the chart, on June 19th, and we were in a slide here, and the VIX actually spiked to the unheard of number of 15 at that time, which of course I'm being sarcastic, that's not high at all, but the VIX did spike. And so the market had this tone that was a little bit negative. Now when you look at the chart, it's just one of these little pullbacks that we've had on the climb up. But it's important to know the backdrop of what was being asked about. The other thing I want to point out is that this is a survey of specifically people like you, I would suggest. These are people that identify themselves as entirely self-directed investors. These are not the clients of a Merrill Lynch broker. These are people that are calling their own shots. They call themselves active traders. There are some who call themselves professionals in the survey list of 980 people that we fielded this with. And they consider themselves to have at least moderate to advanced investment knowledge and experience. So this is not man on the street. This is us. This is engaged traders who follow the markets and pay attention to what's going on and react to it. So that's the methodology, the backdrop. Let me just sort of share, this whole deck is about, I don't know, 40 slides or something. I'm going to look at like 6 of them. We'll just look at them briefly. So the first section is the sentiment section, where we ask the audience, what do you think about this? What do you think about that? And it's fairly conventional here. I'm not going to dwell on this. Look, most of them were expecting the market to be higher, some lower. Basically, are you bullish or bearish? But down here is where we have a little fun, because what we do is we ask to reflect on movie titles and choose which movie title captures the market for them at this point. And the leading one right now is Easy Rider, so that's right there. If you can't read the others, we have Dazed and Confused, Singing in the Rain, Raging Bull, Apocalypse Now, Easy Rider, Pulp Fiction, Jackass, and Fear and Loathing in Las Vegas. So, Easy Rider is in the lead. A couple of observations. Notice Dazed and Confused was the leader for some time. And that really speaks to the market sentiment that's out there. People are like, huh? How does this keep going the way it is? So Dazed and Confused was big. The other one that has climbed up into the number 3 spot is Singing in the Rain. And I've always thought that was kind of a little ambiguous. I'm not sure if that means we're happy and it's okay that it's raining, or is it hiding our tears? I don't know what the actual interpretation was. And at the bottom, Jackass, Pulp Fiction, and Fear and Loathing in Las Vegas are at the bottom, and they've never really shown much. Although a while back, Pulp Fiction did have some reasonable traction on there. So at any rate, this is just a question that we ask to have some fun, and it gets picked up sometimes by financial writers because they'll make a fun headline out of it or something like that. Okay, so that's views on the market. On the economy, everybody's pretty happy, you know? The economy's good or fair, A or B. Down here's a question about market volatility. And remember, this was fielded when we had a VIX spike happening right at that same time and a small drawdown. What risks are you actively managing right now? And in the number 1 spot is volatility. As it should be, because it's really the only one that you can actively manage against. You can't manage against war, although that's one of the questions, inflation, but market volatility. So let's just say the audience got it right, because that is something that you can take steps to manage. Stops, alerts, etc. So they got it right. Armed conflict and political instability have risen. Those two notions are on the higher end than where they've been, and I think we're probably not surprised at that. Question on the Trump administration, and there's nothing really hugely, most people are optimistic about the economy. They believe that the administration's policies will lead to market growth and economic growth. But the one really interesting takeaway here, and certainly has implications for our audience too, is the question on the upper right is, have you traded based upon a Trump tweet? And 1 out of 3 have. That's a lot. That's a lot of trading on Twitter. So whether that means TWTR is a stock to be looking at, or who knows, but there's a big deal here. It's not trivial. And it certainly points to the importance of social involvement and communication in the markets and the way it's developed. And I think it's a big one. Will that get higher? I don't know. It remains to be seen. Maybe if Trump starts tweeting ticker symbols in his tweets, we might get a little more. So that was views on the administration, but I like the Twitter one there. Now, when we look at asset classes, and again, we couch this question in an interesting way. We say, if you could give one piece of investment advice, basically one recommendation, to a friend or family member who's thinking of getting invested. So this is sort of like you got a teenage kid who says, I got $1,000, what should I invest in, right? So it's like good advice we're giving. It's genuine advice. And look, stocks are in the number 1, of course. What I think is, there's 2 interesting ones here. First is both, and this is the second and third highest ones, both mutual funds and ETFs declined in interest in this group. And that's kind of reversing a little bit. ETFs had been growing in viewed importance. Mutual funds have been on a decline. Everybody's been talking about the decline of mutual funds, and a lot of that was due to the rise in ETFs. And now they've both become less interesting to the audience, to the questionnaires. So what is that? Is it the stuff that's been coming out about ETFs, and was it, flash crash backdrop? I mean, that didn't happen recently, but nonetheless, seems to be a little bloom off the rose in the ETF world. Still, it's an important asset class. The other one that I get a kick out of is way down at the right. It's the second to last, where 18% suggested commodities to this first-time investor. And I find that somewhat preposterous. It's probably not the right thing to be dabbling in your first investment. I suppose in that could be someone who said buy gold. So if you were to buy a hard asset like gold, yes, that's a commodity. But I think the real meaning is, are you going to trade futures? And I think that that's not a correct first step. Down below, I don't see any big point to draw out here. Large cap, small cap, et cetera. But let's go to the next one in sectors. And again, I always think it's interesting to reflect on what the backdrop is that the audience is seeing when they're asked these questions. The first one, take a look, the farthest on the right is energy, and it's very high. So interest in energy has been very high, and it has stayed very high despite the fact that it's been a bloodbath. It's like, ever since the decline in crude oil and the drop down in energy prices, if you start looking, by the way, in many screens that I have, energy stocks are starting to show up in screens that I'm seeing. But basically, the energy has been a trash pile for a long time, yet the audience is still holding on to it. That's interesting. Second one, technology, no surprise there. It's a technology-oriented market, lots of interest in that. But if you'll notice in third are financials now, and it's a dramatic jump. Over the last 3 quarters, financials have jumped up substantially. And so remember, this is an experienced, knowledgeable crowd who's moving into financials. So the large banks do seem to be attracting interest. Also, healthcare has come down. The controversy about what's going on with the Health Care Act and political situations, which, by the way, if you've followed healthcare over the years, there's always that political backdrop in the world of healthcare stocks. It's always present. It has always been there from the beginning of my investment career. Legislation, political changes, and healthcare are a hot button item. In the middle, industrials, telecom, nobody has much interest in those. The last one I find somewhat interesting too is the lowest interest is consumer discretionary stocks. So let's think about this. If you were to look at XLY, the consumer discretionary ETF, since the 07 bottom, 09 bottom, consumer discretionary has been one of the top performers by far. Yet, it's got the whole retail stink on it right now. So that is what's bringing it down. But if you believe that our economy is in good shape, then buying things like Carnival Cruise Line trips and buying Ford Motor cars is something that does well in that environment, yet the crowd isn't into it. And again, I think it's because of that, the whole retail world and the Amazonification that's going on in that world. I think that's the last slide that I was going to share. If I go forward, we'll see. It was the last slide that I'm going to share. Anybody have any questions about it? And by the way, if you're curious, as I said, if you're curious about the deck, there's an URL, and I left my card over there. It's about.etrade.com, and then you go to Newsroom. It's our corporate communications portal. You go to Newsroom, and the full file is there. It's published every quarter, and the next wave is coming out in about 10 days. So you can pull this one down if you want, and then in another 10 days or so, the next wave will come out. And each one we sprinkle with a few more questions that are topical or thematic to what's going on. The rest of the study, and some of you might have an interest in this, speaks about, we compare millennials, Gen X, and baby boomers, and ask them about their use of mobile, their use of robo-investing. And one interesting point in this that I think, again, speaks to the theme of this discussion here is when we look at millennials and ask them about mobile, mobile is the single most important interface for the millennial generation. My generation, to me, it's just an adjunct to my desktop experience. But for the millennial, it's a mobile platform that they want it in, and that creates a challenge for developers, brokers, to bring the functionality that the desktop gives us into a mobile platform, and it's a big deal. And our mobile platform doesn't do everything that Etrade Pro does. It doesn't do everything that the Options House desktop program does, and so that's a coming challenge for us to try to develop the kind of AI and smart idea generation into a mobile platform. And so that's what's on the horizon for all of us. Anybody have any questions about the study or anything about going on with Etrade? Yeah, Dan.
How long is this study, like, how often do you guys do it?
Yeah, so it's done every quarter, and it's now been done about 5 years. Yeah, so it's a yes, yeah, absolutely. So some of those observations come out more dramatically when you look at it over a longer period of time than just 3 quarters. Wait, I'm sorry. Yeah.
Can you repeat that URL again?
Yeah, about.etrade.com, and I think that should bring up our corporate comm portal, and then go to newsroom, and I think it's down in the lower right. All right, well, look, happy to be here on behalf of Etrade. Happy to have you all here in person and you out in Streamland. I hope you have a great rest of the show. We got a couple cool panels coming up. Thanks a lot, and we'll talk to you next time around. Thank you.